Welcome to the investment markets overview for the week ending the 4th of February 2022. U.S. federal government debt hit $30 trillion at the end of January. Or more accurately defined, it's the U.S. taxpayers' liability, as government have no money of their own. It took 232 years since the American Constitution for federal debt to grow to $10 trillion, with a trend projection to hit $17 trillion by now. However, as seen within the chart, 13 years of reckless spending by the organs of the U.S. state, irresponsible policies from the stewards of a safe monetary system, the Federal Reserve Central Bank, and barking mad socialist rhetoric such as modern monetary theory, have tripled the 232 years of accumulated debt number in just 13 short years. The overview includes the performance statistics for the main stock indices, which were mixed. Whilst sovereign bond yields and the commodities covered were higher across the board, as were the cryptocurrencies, led by Ethereum's 18% gain. Meanwhile, for the regions, U.S. market interest rates are rising, regardless of what the Fed does or doesn't do, as UK consumer confidence declines. Whilst out east, the year of the tiger will depend on credit growth. The International Monetary Fund state that global debt reached $226 trillion United States dollars by the end of 2020, and warned of high debt to GDP ratios. A debt-to-GDP ratio is a simple metric that compares a country's sovereign debt to its economic output. By comparing how much a country owes and how much it produces in a year, economists can measure a country's theoretical ability to pay off its debt. Japan is leading the concerns, and for context the US, UK and the Eurozone are all at the 100 to 120% debt-to-GDP levels. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A one-month trial of this 40 times per year publication is available for less than $15, or the price of just one decent cup of coffee per week. It's an ideal opportunity to grab the bargain discount for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview.